Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, May 1st, 2007. The market's closed, and the shorts tried their best to push this market lower, but you can't keep a good market down for too long. The S&P 500, the spiders that is, closed with a gain of 38 cents, or 0.26%, and they continue to hold above that rising 10-day moving average for now. I still wouldn't be surprised to see a deeper pullback, maybe even as low as down towards 146.5. But for now, the buyers came back today and retook control. We had a little bit of stabilization. The market made a higher high right here to add to that higher low. And, you know, I'd still think that the market needs more stabilization in here. It did come down to about that, close to that 147.50 level. But the buyers are still out there. Maybe it's short sellers looking to cover their positions. But as I said yesterday, there's been no damage done to the uptrend on the daily time frame. The short-term time frame, we do have these moving averages heading lower, and we've still got a rising 5-day moving average. So kind of still a mixed picture. Like I said yesterday, you want to be defensive in this environment, and I still think that continues to be the case. We were looking at this trend line yesterday, saying that and you could look at it this way. I wanted to redraw that in because we were looking at it off these lows and saying that it had been broken. But you can also look at it, looking at these areas in here, saying, hey, it held perfectly off this trend line. So, again, drawing trend lines is not perfect. Technical analysis is not perfect. That's why they call it an art, not a science. It's not going to give you all the answers all the time, but it can be a good way to guide us through the market when we're trying to make our timing decisions, obviously. The Nasdaq 100, the Qs, we had seen this market also holding up very well today. The Qs finished with a gain of 10 cents, 0.22%, holding still above these prior highs in here, and also holding up above that 20-day moving average. That's, in fact, the 10-day moving average is what we ought to really be looking at. But what I had said the other day was breaking below the 46.50 level, or 46.30 level rather, would probably lead to a test of about 45.60. It didn't quite make it there, but it did make a lower low in here, and then the buyers took control in the afternoon, and it looks like the market's trying to recover. I would still expect for another day or two of choppy trading till we see who really can gain back if the buyers can really fully gain back control of this market. And in here we were looking at the trend line sort of like this, I believe. Anyways, the market does continue to act good. No damage done on the daily time frame. We've still got a very healthy uptrend in here. Big volume today. I got an email asking me what do I think about that. Big volume without further downside equals accumulation. So that's probably what it means. We are in an uptrend. This is a short-term pullback. Maybe we had some of those shorts reconsidering their position and trying to minimize their losses on the little bit of selling reprieve. The semiconductors, this chart looks just fantastic. It almost looks too good to be true. But what we were looking for in here was hopefully a pullback all the way to $36. I was thinking it would probably be more realistic to see $36.50, which did occur today. So we actually got in a low of about $36.30 in there. But the semiconductors, after this fantastic breakout on a daily time frame on increasing volume, had pulled back on light volume. We kind of got this little volume stamp here, which to me indicates that perhaps we're ready to go higher once again in the semiconductors. This old level of resistance had held for almost a year, so when you get a breakout like that, you often get a very strong move out above it. So right now, though, looking, yesterday I said it seemed as though the buyers would gain control above $37 a share. I still think that's probably the case. We need these moving averages to flatten out, see that 5-day moving average flatten out, and then the market make a high above that. So I think above $37, we could probably see further strength in here. It is encouraging to see these higher highs and higher lows. What I'd really like to see was a move up to 37, maybe then a pullback to 36.80 rather, and then a break past that $37 level. Then we could continue higher once again. I think there's a lot of energy, upside energy, still to be spent in here. A lot of people looking to participate in those semiconductors who've been out of them for the last year as they've done nothing. The IWM Russell 2000, like I said yesterday, breaking below 81. A lot of times it could be just a little bit of a shakeout, and it looks like maybe that's what we had here. We had a test of the 50-day moving average today. The IWM, the Russell 2000, did finish with a gain of 34 cents or 0.42%. So yesterday I said it was reason for concern because the $81 level had been such a important level of resistance that when you break down through it and close below it, let's see if it's just a shakeout. A lot of times it does turn out, end up being a shakeout. So I think this low right here is going to be pretty important, near about $80.12. That low is going to be important going forward. If the market breaks down below that level, then there could be further selling. But I think that this could end up being maybe a little bit of a bear trap in here, and that we could see a quick rally up towards 82. So the uptrend is still valid in the IWM, and no reason for real concern there. Let's take a look at the stocks. I want to start out with a tick chart because this shows this ACUS stock that if you look at a daily time frame, let's look at the daily first, ACUS. We got involved in this one long yesterday, and it looks like a big gap lower. But if you were paying attention before the market officially opened this morning, you would have seen there was news on some drug that they had or something like that, and the stock actually traded as high as about $5.60. So $5.55, maybe it looks about $5.50 a share. And then it broke down, and it was below this VWAP line. This is the average price that it's traded at during the course of the entire day. Here I've got 100 ticks, and basically, though, it broke down through our stop at 390 right in here. So it traded nearly 500,000 shares before it broke down through that level that I had suggested as a stop after we got involved at 401 a couple days ago. So I don't know how you guys played this thing, but hopefully you were watching it pre-market, saw that it was selling off, and got out at that suggested stop price, because it did trade there. That's the deceptive thing about these daily charts, is it shows this huge gap when in fact it traded, you know, off this chart. I mean, it traded up to $5.50 a share, which the scaling doesn't even show for here. So it had a huge range today. And bottom line is, though, if people were averaging this stock or thinking about buying the weakness, the average person lost money in this stock today. The average transaction price was about $2.94, and it closed at $2.87. So most people are down in this stock, and hopefully you avoided that big disaster. Again, these ideas that I provide are just meant as as ideas, not recommendations necessarily. We were looking at BLUD above $33 a share. That didn't occur, so no trade should have taken place. We were looking to buy MDII on strength as well. That didn't occur, so no trade should have taken place. Monster, we were looking for a rally and then some weakness. The weakness never occurred. No reason to take a short sale there. The only trade that we have open now, and the one that we entered today, was Raytheon as a short position. We had gotten long after the strength. I'm sorry, after the strength, we got short at 53.50, and right now I would say you want to lower your stop to break even at this point.